All right, we are looking at Best Buy. Okay, and we can see stock had a great rise up last quarter of the year, kind of the same pattern that we're seeing everywhere else. Stock slipped, big December sell-off, has recovered a bit since then, not a ton, a bit. Has really just kind of flatlined over the last, month or so. Huge volume area right in here around 56.5 or so, which coincides right with the 50-day moving average. So let's take a look what the options are showing here. Okay, today is now the 26th already. Stock is 60.5. Okay, what is the expected move, everybody? Robert, how are you coming up with 610? The $4.90 to $5 is definitely correct. Okay, got it. All good. Okay, so we've got about a $5 expected move. So that puts us at a range then of 55.5 up to 65.5. So we just looked at these charts here, or the chart here, and we saw that there's probably some really big support right here, which is the 50-day moving average. It's the major volume area here. So there's probably some really big support around 56.25. Okay, I just want to get those notes up there. And then on the upside, I don't see a ton of resistance really until, almost this point right here. And when I say this point right here, it's not just because this was the recent high, right here at 67 half-ish or so. But if you actually look back, going almost all the way to January of last year, over a year, that same range there, right here, and then here, and here, and here, and actually again here, turned out to be big support. Once it broke through that, those defined areas of support then become resistance. And we see that coincides right there. So I would actually say there's some definite resistance up at 67.5, which is March 1st, David, this week, which is above the expected range. Okay, from a directional standpoint, bullish, bearish, I don't see a big pattern here at all. If anything, I'd maybe be a little bit bearish just because of the lower lows, lower highs. But I think that this support right here at that 56, quarter-ish area that we identified was pretty darn good. So I actually look at this and I think that there is, potentially an opportunity if the reward to risk of doing an iron condor, but using that area of 56 quarter-ish or so as the bottom rather than the expected range down to 55 and a half. So let's take a look. So if we want to look at 56 quarter and 65 half or so, we've got this iron condor right here, which I don't love at all. I don't love it for two reasons. A, it's less than 50 cents 1-to-1 odds, and it's not just less than, the 1-to-1 odds, but it's also going to be within, not outside of the expected range area. So the 57, 56, and 65, 66 iron condor is only about 45 cents. Don't like it at all. Don't like that at all. All right, let's look at a strangle swap. And I'm just going to turn the mic off for a second, guys, and I'll be right back. Okay, so if the iron condor doesn't work, or doesn't set up to our risk parameters, let's look at a strangle swap. Okay, and we can go right to the strikes of around 56 and 65 or so, and let's see what volatility is doing. Okay, so the 1 week vol, yeah, it doesn't look great, but let's take a look here. All right, so this thing probably cost around 40 cents. This is the 55.65 that I have up here. Not horrendous. Definitely not horrendous. Let me tweak some strikes here, guys. And when I say not horrendous, that's good. If this thing costs 40 cents, okay, this gives us a really, really nice profit area, reward to risk. Now, maybe it looks too good, right? Maybe it looks too good. So if it looks too good, what would I want to do to make it not look so good? Well, too good here meaning that maybe there's too much profitability over too wide of an area. So exactly. So what that lends me to think is that maybe I need to tweak my vols a little bit. Our long vols of next week, let's lower these a little bit here. Now, I've already really kind of lowered the heck out of them to start with. Now I've really, really dropped them even further. And if this still lines up okay, then we really, really have to take a look at this. And then we'll look at also the 2-week. Okay, so now you can see it's not quite as palatable down here, but it's still really good. This is still really good. Not as good, and I'm glad it's not as good. Okay, so this is not bad. Let me put up on the so the 55.65 strangle swap, March 1 to March 8 is pretty good. Now, I don't want to just settle for those strikes. Let's tweak the strikes a little bit, see if there's something that looks a little better, and then I also want to look at the 2-week swap. Okay, so first thing I'm going to do before tweaking these strikes is just go to the 2-week swap. Let's see what volatility is doing going out to regular March expiration. Okay, it's only going to cost maybe 15 cents more. This is probably about 55 cents instead of the 40 cents that we had looked at. And let's see what we got here. Okay, that looks pretty good also, guys. I would almost be inclined to do the 2-week as opposed to the 1-week right now. So the bingo, there you go, Ken. Way to wait it out, man. The March 1st, March 15 looks great also. So now what I'm going to do, guys, it's about 15 cents more, Michael. 40 cents on the other. This is probably 55 cents. And I love the look of the graph here. What I'm going to do, and I'm going to do this off the mic, you're just going to see me tweaking with some strikes. And what I'm going to do is I'm going to build a spreadsheet like I do, or a Word doc here, so we can look at all of the comparisons like we do. And then kind of look at them all at once and see what is the best option, no pun intended, out there. All right? So let me do that. You can ask me questions. I'm going to go off the mic, but if you guys have any questions while I'm doing that, just let me know, and I'll certainly answer them. But I'd rather just kind of talk to myself than blabbering in your guys' ears while I'm doing this. This thing cost 40. Let me put this up here, and then I'm going to start playing with the strikes here. All right. Let me answer any questions if you have them. Shoot them at me. I'm going to turn the mic off, but I am here, and you'll just see me kind of adjusting strikes here and seeing if we could come up with something that looks in our wheelhouse. All right.